Hey everybody, Jack's here. Hey Jack.
Hey, what is going on?
Oh, another day in paradise as always.
Yes, I
And
found a little paradise trade this morning. Uh, Sold some covered calls on IBM. We were just
I
talking
mean,
about that yesterday, how when you got a stock that's popped higher, it's a great time to sell calls. And if you got one that dropped lower within the context of an uptrend, it's a good time to sell a naked put.
there you
So I
go.
got $4 and some change. Hello, Will, for selling the 305 that expires on Halloween.
That's got you got a little upside to that one.
Yeah, I don't want to get called out of this. My cost basis is low. I take the dividend every quarter and reinvest it into the stock. And when I sell calls against IBM, I use the premium to buy more.
Well, if we actually finish this gap fill and get above it today, the odds are, based on my technical pattern, we might get you right up there near your
Yeah.
sold put,
Well, this
or sold call, sold
this,
call.
this is for Halloween's expiration. So you think we'll get to 305 by trick or treat?
Well, here's the thing. This pattern right here with this high and this roadmap line with the low right below it, when we fire off the entry, which is what this will do here, the average time it takes to get from here to here, from right here at the entry, which we had a gap down, so that's a little extra resistance, but we're going to pop right through it. It looks like the average time it takes is 45 candles. That's the average. Now, the standard deviation on that is 35. So when you encompass 99% of all the moves by adding 3 standard deviations, that takes you out to 150 candles. So it goes from 145 average to 150 candles to cover 99% right there. And, can it happen faster than 45? Yeah. Half the time it goes faster than 45. So that's the average. Now, that fits right in there with your time frame though. If it's in the average, 45 bars puts us right out here past Halloween.
Cool. I really don't want to get called out. Like I say, I would actually buy this 305 back if it got up to 305 or 306. I don't want to get called out there.
Yeah, 45 candles for the average puts us out actually right at Thanksgiving. So,
Yeah, that's cool. One of my favorite holidays. You know,
mine too. I love to eat.
oh man, wait till I tell you my Thanksgiving plan. You won't believe it. It's unreal. But I think IBM is the quantum play. I don't think anybody's going to beat them to a quantum computing solution. The other thing interesting about IBM, I think they're going to get a lot of business helping build out more data centers, which I think that data center thing could be a huge problem for companies going forward. But IBM is in the catbird seat for design and build out. So that's an interesting piece of their
Yeah,
business.
yeah, there's not really anybody else that's been doing it longer than IBM. So,
No,
at
no,
least that's still around. Now,
yeah,
before we get too far into anything, the profits before what's shown here today, not typical. We know make no future earnings claims. You might lose money doing this thing we do called trading. Trades expressed today, some of them that you'll see later on are from historical backtested data to demonstrate the power of the system that we're going to show off later. And the average return on these live trades, winners and losers combined, about 23.4% on those trades will show off. So 81% average win rate. That's pretty wild right there. Jack, these are good stats. This is your program that we're showing off right here later today.
yeah.
And it's got about a $250 per contract. And we'll talk more about this as we go along here. But let's be honest. When you do this thing we do called trading, there's no goose that lays golden eggs. Jack and I work with people like you every day to try to give you an edge in the markets. If you can't handle losing trades, don't trade with real money. Paper trade. You can paper trade to your heart's content and never lose real money. It's not a race, right? There's a lifestyle to make income out of the markets right here.
They said all.
All right. So
This,
that's IBM. I haven't really done much. Market's pulling back. I'm kind of positioned tight. Yesterday, though, giant call flow coming in on Tesla
hmm,
all the way up to the 550 strike. I mean, millions of dollars, Jack. I don't know if you saw that.
I did. I
Millions.
I I I don't know if somebody knows something that we don't know, or if this is just pure spec based upon technical analysis.
Well,
But the
550 is my target right here. 550. And no, not sugarcoating it, not nothing. I mean, that's it is set up for my pattern. The entry was right here. The target's right here. 45 days on average is how long it takes to get there. So it would not surprise me to be there. I'm just saying.
Oh, I think so too. It's getting really nice and volatile. I love seeing it make these 3.5% moves every day, right?
Yeah, I mean that's the juicy stuff, and we'll circle back and talk more about that. But I just thought it was interesting on the call flow. Again, that 45 candles from the breakout that happened a couple weeks back puts us right before Thanksgiving. So, but again, it can last. This could keep churning in here for 99. If it followed the 99% of the time, we'll finish it up by 6 months. But that leaves 1% of the time that it goes on indefinitely before it gets to the target. So
Yeah,
the
it's going to
stop,
be by far the most crazy stock out there right now. It was down to 320. We were looking at maybe it goes to 300 and it took off from there.
yeah, I mean this little pattern it had in here with the lower highs and higher lows until we broke out right there. It had a very real possibility of taking a dip down in here, possibly to 270. And a correction like that's still in the cards. We could still come all the way back down and then go shooting back up and hit my pattern. So it's all in the cards. We do have earnings coming up, and they're gonna report on the early end here, right with Alcoa and the financials,
Yeah.
right there on the 15th. So they're going early this time, right at the beginning of the earnings season.
Yeah, you see, Trump wants to do away with quarterly earnings reports.
Yeah, I'm mixed on that. As a trader, I love the volatility that earnings season brings every time, and I feel like that's less opportunity to make as much money, honestly. So, but
It would turn everything into more of a news-driven event for trading. Without earnings, they would just make press releases and rumors and things like that. But uh, yeah, it's going to be tough, tough, tough run up here. I
it,
don't
it,
know. Trump saying if we cut out the earnings reports, it would save so much money for corporations. And when you really look at what they're doing, they've got full-time staffs just set up to get the accounting straight every 3 months. Huge, huge expense, auditing, uh, CPAs, all that stuff. It's very expensive to do quarterly. But as publicly held companies, they probably have an obligation to do it that way. So I don't see that going away. I tell you what I do see going away is that $25,000 day trading rule. That's about to be gone. FINRA just approved that, and the SEC will probably approve that. So nobody will be under that $25,000 day
it's
trading rule.
gonna what I saw, it's going to drop from 25,000 for day trading down to 2,000
Yep.
is the replacement level. So you'll be able to, if you have more than 2,000 bucks in your account, you'll be able to day trade to your till your account goes pop.
Day traders rejoice. Yeah. This is it's because crypto, they can trade crypto to the cows come home, right? And the
Yeah.
stock, you guys are looking at this and saying, hey, we're losing out with this day trading rule. This is hurting us. So, it's going away. Robinson
Yeah,
asked, any effect on the market? 6 hours ago, U.S. fighter jets scrambled to intercept Russian warplanes near Alaska.
that happens daily.
War doesn't have any more effect on the markets anymore. Everybody's scrambling. Russia's flying over Poland. It doesn't do anything anymore. Rumors of war doesn't do anything.
The only war that really matters is missiles flying in the Middle East, and that's what caused, that's what happens. And
Yeah.
then when everything chills out, we do this. And then if we get down below, I think if we get back down in the mid 50s, more missiles are going to fly and make the price come back up again. So
I'm long a little Lockheed Martin. good dividend payer, but the stock hasn't done anything for me.
Yeah, and there's all sorts of ways you could play defense technology stocks. Um, if I spell defense right, you've got Kratos is a up and comer in there. You've got things like ITA, Shield, which is an interesting one for an ETF. Look at that, just going up and up and up. Like, why would you not get in this, Jack?
I
I
know,
mean,
I know. I've been looking at this thing too. Beta's a little light, but the chart makes up for everything else except for a tiny bit of loft. But yeah, that's as good as it gets as far as trends go. And that price is very affordable. You could do the triple crown on here, no problem.
yeah, the beta is a little light, as Jack says, at 0.69. It's very related to the or a little chill, more chill than the S&P, but for a chart that just does the auto zone pattern, I would call it uh beautiful, right?
Very beautiful.
So
This stuff, good trends out there. Longer term trends are looking good.
it doesn't pay the strongest dividend. The indicated dividend right now 0.38, but that'll probably increase as those defense tech companies pay more dividends. Look at the actual holdings of this one. Come down and look at the fund. I love TradingView because you can just like used to you have to go do Google all this stuff. Now there's just buttons for everything, like pulling up what the holdings are. It
Isn't
gets
that the
you.
coolest? That is the coolest thing ever. I know it used to take me hours to find out what are they invested in? What's their portfolio look like? And like you say, now with one click, you can see, do I want
This
these?
is
You know,
we got some Palantir and then stuff I haven't even heard of, like Rhine Metal, AG, and and we've got Base Systems, Lockheed Martin, Northrop Grumman, Leidos, General Dynamics, L3 Harris, Leonardo, Hanwha, Thales, Saab, BWX. I mean, lots of weapon makers in here. And you got up and coming technology in here. You got established companies in here. So it's an interesting mix, and this thing's just been rocking and rolling.
yeah, it is. I'm surprised, how volatile the world is now. And when Putin went into Ukraine, I just was shaking my head, thinking, this is so strange. It's 30 years ago, maybe war, but now you'd think you could have these negotiations and solutions that didn't involve bombs. But it looks like mankind can't get past this war stuff. But
Eh,
I'm shocked at it, really. I just can't believe how much violence is going on all over the place. Syria is still a mess. Haiti's a mess. The whole Middle East is a mess. You'd think things would have smoothed out by now, but not the case.
well, those getting into the bigger conversation, those guys have been at basically the Middle East been at war since the beginning of the Middle East. So um, I don't know about peace in the Middle East, but we'll see.
Never going to happen. Yeah, I knew some guys in the military one time, and we were talking about that, and they went into this area, Pashtun or something, I don't know, and they were saying how that these tribes, there's three tribes there, and two of them have been at war with each other for thousands and thousands of years.
Yeah,
As soon as the Americans come in, they stop their little feud and team up to fight against the Americans. And as soon as the Americans leave, they go back to fighting against each other. It's like it's their way of life.
yeah. And right now, Bitcoin dipping a little bit below my support low, right down to the support level again. Poking its finger across or toe across last night, across that 111. I don't know, Jack.
Yeah,
This
it's soft. I mean, yeah, it's looking soft. Everybody I'm talking to on this is saying it's soft. Sailors in trouble. Um, yeah, I don't know.
if you look at the IBIT chart, we could take a little trip down here to the 50, upper 50s right there
I'd
to
be on
find support.
snake on a monkey if that happened. I'd jump.
Right here, might take a little trip down there, right there.
That'd be
But
good.
that kind of pulls the loft out of the chart, as we say, and Sets us up for the next run higher, really. Shakes out the weak hands. That's what we need, right?
Exactly. I still got the 59 naked put going, so we'll see what happens.
And you're out to Halloween on that one, right?
I'm out to Halloween.
Oh, this could all be over before we ever, before we even get to Halloween. So.
Well, I also got the calls, right? I'm still to 71 and a 73 strikes.
Yeah, circling back to another conversation we had, Intel. Look at that baby go right there. Look at her go. Hey, Jack, I got to step away real quick. UPS just came in. Just one
All right.
minute. I'll be right back.
Yeah, this intel looks good, but folks, that gap has to be filled in just like it was there on the left. It's trying to get up there. Now it has really like two gaps it has to fill in, one on the far right, and then that one right over the 1 day. I'm surprised that it's gapped and gone, right? Normally it gaps and flops, but this kind of pulled back just a couple points and then went on even higher. It's got a lot of people that are short the stock trapped as well. So we could see a little bit of short squeezing going on. But this has been really surprising how it's held up. I would have thought this would have faded back. We got two gaps there we got to fill.
And I kind of expected Intel to come up to test this level right here, especially when the U.S. government was getting involved in it a couple weeks ago, back in the 20s. And I put, I wasn't sure on the time frame since it hadn't actually completed my technical pattern, which would be a close above this 6 foot 8 right here. That's what sets up the upside. So this was pre big picture technical pattern working out. So I jumped on INTW, which is a leveraged ETF with 2x leverage. Didn't have to worry about strike prices or anything like that. Just bought a few shares of this back in the 20s, around 23.50, I think is what I got in at. And we just closed it out this morning for 39 right
Okay.
here. So that's a 67% upside there. Robinson in the chat talking about it there. Rob Royero. And
What about this as a takeover candidate?
we talked about that the other day, how when you look at it, if Nvidia wants to be able to do its own chips, if it wants the fabs, this is a way to obtain that. I mean,
Yeah, especially
150.
in the US. That's the whole reason this thing is where it is as a takeover candidate. Because if they could make, like you say, if they could make the chips, uh, that'd be ideal for Nvidia. And I think the government would let it go through too. I don't see any problem.
$1 share price on Nvidia equals $24.4 billion. So think about that right there. That's
Yeah,
like a $5 move on Nvidia. $5 worth of worth of all their stock
stock for stock swap would be perfect.
affords all of Intel. $5 of Nvidia.
That's why I'm just kind of wondering, like, why didn't they just go all out and buy it? Or maybe things change and they do end up buying it. But I think this is a takeover candidate. I'm not long it though. If I was, I'd let you know, but I don't like the way it's been trading. I don't like that pattern at all. But as far as a fundamental business, this would be perfect for Intel. I mean, Nvidia to buy it out straight up.
I think the problem probably is Nvidia isn't necessarily willing to take on that debt obligation right there.
Yeah, but they've got all this buyback going on, so I think they do a stock for stock, right?
Yeah.
Swap, pay for it with the shares that they haven't issued, or pay for it with shares that they've bought back, just free trading shares. They would definitely not take on the debt. That's uh that's a no-go. I saw where Oracle, what they issue, another 15 billion in debt. Was it
Yeah,
15?
or Oracle just crazy. You pull up Oracle and look at their debt, it just keeps going higher. All their growth is basically debt, and so it's no real intrinsic growth.
Yeah, none. Yeah, they get a $400 billion contract and they raise 500 billion in debt. Yeah, it's kind of a trap, I think, the stock, being down 4.7% today. What was it, 320? I thought, man, this thing is way, way, way overvalued. And people say, hey, they've got a hidden position in this that's not going to go away. They're going to remain strong. That might be the case, but man, this debt is brutal. And that,
Yeah, $111 billion in debt versus your cash flow and equivalents is only 10 billion. I
yeah,
mean,
this has got dividend cut written all over it, which is what dividend investors hate more than anything when you cut the dividend. But that could be in the cards going forward here. This dude, man, Larry Ellison, they talk about his net worth being one of the richest guys in the world, but I personally would never want to have that kind of debt hanging over my head, even if it's not personal debt, even corporate debt. That's just rough, man. And I don't think
yeah,
it needs to do that. Yeah, Bodine says Oracle took over Sun. I remember that.
yep.
Sun had a huge, huge corporate office by my house in Boulder County, and we got all kind of good news out of Sun. I love trading that thing, but this is a bit of a trap, I think.
Yeah, we'll see what happens. I mean, it coming back to reality a little bit, with that kind of big gap up on just an announcement, and then it turns out the announcement, the money is all just coming from Nvidia and going back to Nvidia. So it's like, is that a sustainable gap? Probably not. We're probably gonna bring it right back down in this area somewhere,
So too,
sometime in the future.
and even if it came down, no, I wouldn't touch it. It's just a story stock for me. I don't see anything in it for making money.
Yeah, I looked at it months ago, especially back when it was down here around 100, as an AI catch-up play. But now we've kind of got that. We've kind of played that out a little bit. So it's sitting up here in the nosebleed section, and I would expect it to pull back down. And then we'll see what happens. That could be the end of the current move too, right
Yeah.
now.
Yeah, that Clostus asks about that day trading rule already in effect. No, it was passed by FINRA. It now has to be passed by the SEC, and then it'll be in effect, but not right now.
Yeah, it's not, yeah, it's the speed of the government for you. Yeah, it'll happen when it happens.
Robinson Royero took in $500 more. He added a credit spread on AVGO at 317.50 to 315. This is the first week in months and months and months I didn't do a credit spread on AVGO. I
Eh,
picked instead.
it's got some loft to it, that's for sure.
A little loft, and I'm long a ton of this. I'm not worried about that. I sold some 400 calls and some 405s. I got almost 2,000 shares now. So that provides great monthly income.
I think you're probably pretty all right there. At
I'm
least
good. I don't
the
want to get
near
out of this either. My cost basis is stupid low, and I don't want to get called out and create a tax problem for myself.
these are the two support levels I see down at 300 and then down at 260 right
I
here.
don't see it goes to 261 ever. No, this is only going up. This ain't gonna. I think it goes to 500 before it goes to 261.
Well, we haven't really back tested this breakout zone here. So yeah, you can say what you want to, but these things have a habit of coming back to revisit. It may just stop right here in the 280 area where we
Yeah,
had these bottoms, but
I would say that be closer to 300. Fill in that gap, and that'd probably be the bottom there. Yeah.
those lows right there establish this kind of like range where I don't really expect it to come into, but I would consider anything touching that range to be kind of back testing the breakout right there.
Well, people love the earnings, and obviously, and now maybe some of the bloom will be off the rose, and it'll let it go higher. But the thing that's going to drive this one, the same thing that's going to drive Nvidia, it's not going to be so much how investors react to earnings. It'll be how does the stock drift higher between earnings reports,
Yeah.
and that's all going to be news. People weren't so happy with Nvidia's earnings, but when they announced that OpenAI deal, that's the kind of thing that's going to be a catalyst, is a press release where people didn't see it coming. And I'm in this one at this. What am I in this 170? I don't know what I got on this. Let me look. I confused myself. All
Hey,
right.
when you hold several positions, it's hard to remember all the exact numbers. I'm right there
Yeah.
with you, Jack.
Yeah. And I got more positions now than I've ever had in my life. Yeah. I sold the 172.50 and bought the 170. And I got 22 cents. That's 8.8%. That expires tomorrow. And again, even though it touched my tripwire at 175, I'm going to lean on the fact that these options are going to expire worthless, that they'll be out of the money tomorrow at the close. That's my plan.
Then we come in here and look at it a little tighter. Now, it did pull back, hit your tripwire, but it bounced back off just like AVGO did last week.
Yeah, there's a
Oh,
little the way this thing picks these strikes, the way I pick the strikes too. It's rare that I find myself in trouble. Uh, so I just rely on that. If you have a good win rate, like you have to have confidence in your system and confidence in what you're doing, and you can't be shaken out too easily, right? You got to
so
be.
this is where Jack's spread's sitting out till tomorrow, and so he's not got a lot of time left in it. Just to the end of the day tomorrow, right there.
That
And
at 8.8%, for 3 days, I put it on Tuesday for Friday's expiration. If I can pop out 8% every week, I'm happy.
I hear you. I mean, that's pretty good.
And
Hey,
there's so many great spreads out there right now, credit spreads. It's just unbelievable.
yeah. And you've got lots of tools that help traders find that stuff too.
Yeah, yeah.
So, and
Yeah, Kay did a credit spread on AVGO. I love it when people do it on their own. I like to teach them, but I love it when the bird flies the nest and can do it on their own, pick their own stocks, pick their own strikes and expiration. That's what I love about it. Give a man a fish, feed him for a day, teach a man to fish, you feed him for a lifetime. So when people start telling me they're doing credit spreads on their own on stocks I'm not doing, I just absolutely love that.
well, good. Good to hear.
Yeah, Bodine says, I remember when Intel was the big dog buying out everybody else. They had a guy on their board that, I don't know if he was from Wharton Business School or Harvard Business School or one of these top guys. And Intel brought him on the board, and he was talking about all those acquisitions they made and how bad every one of them was. Even when they had the smartest guys in the room on their board of directors telling them, yeah, let's buy this, let's buy that. None of it worked out for them. Even with, Harvard Business School dudes on the board and smartest guys in the room, didn't work. So, that's just bad management is all that is. What a good business, Intel could be. It's got a lot of future. That's why I think it's a buyout deal. It's going to be, someone's going to take it.
Here's another one. I sold puts on this one for this week at the 1550 strike. And right now, those puts are down to worth 5 cents.
Now, do you buy them back and roll it out, or you just let it expire worthless?
I usually write them down to a penny and then decide if I'm going to stick around or if I'm going to move on to something else. And right now, I still expect this to make this move up into the 20s, maybe even 30. Right there would be my technical pattern. It fired off back here, took a little dip, and then now it's breaking back higher again, kind of confirming that we're probably going to make this move on up here in the next 45 days on average. So I'll probably keep firing at this one for now until it shows some weakness. And
What's the
right
big?
now the beta on this one is rocking. It's like 3.3.
It's
So the
almost got everything that I like.
premium is really fat. The 6 month trend, Jack, it's an uptrend from the lows at Liberation Day.
Yeah. Yeah. Like
So
what would have caused people to sell this that has nothing to do with a tariff on Liberation Day? Computers, computers sold everything. That's why I say they threw the baby out with the bathwater. They were selling literally everything. Stocks that had nothing to do with a tariff. Market got scared.
and look at this. Even if you don't have a piece of this, you can go out to next Friday at the same strike I'm at right now and collect 40 cents credit right now for,
Nice.
for basically holding for 8 days right there till next Friday. So
Pedro, call in customer service and ask them that question. I don't know if you can switch like that, but customer service will tell you.
I'm going to grab the handy dandy calculator here. Make sure I do this right. I like to don't trust my math on live. It's 2.5% for the week right there. Oh, I clicked away the 40 divided by 1550 equals 0.2 or 0.025, which is multiplied by 100 is 2.5%. And we divide that by 8 to get us out to the per day percent return. Grab that back, divide by 8, gets us 0.003. Multiply by 100 to get us in percentage, and then multiply by that's so 0.3% per day times 365. To annualize it, that's 117% annualized.
I like it.
117% annualized to go down here at 1550
Isn't
for
that
the
crazy?
next 8. So that's why I'm on this one.
And that's where the money's at. You don't need the stock to go up 117% to make the money.
You don't need the stock to do anything but hang out here at 17.
That's what I'm saying. This is why I love income style trading. You're getting a triple digit return. You're not even having to buy the stock. You don't need to own the stock to do the trade. So that's awesome. Now, Pedro asked a question. Then Lynn wants to know what was your trade in here?
If more specifically, what is this trade? This is Soundhound. I sold this 1550 for this Friday, and I'm probably going to sell it for next Friday again because of the fat premium available right in here.
Naked put, that is, Lynn.
Yeah, it's cash secured. I'm securing it with cash using $1,550 per contract to secure like a $40 payout right there.
Yeah, I
And
like that. You don't need to put a lot of capital into this when you get a stock at this price. It's pretty good all the way around. Pedro asks, is it too late to place a trade, buy to open 100 IBIT, sell to open one IBIT October 17th, 70 strike price call for $1.19? That's 119 cash. It's not too late to do it, Pedro. It's never too late to get started. Start where you are with what you can. I think IBIT's got a huge upside. And I'm long 33 or 3,600 shares. I don't even remember. And I got naked puts and covered calls. Uh,
yeah, if I
Odine.
was looking out to October, I would probably take into consideration what we talked about there on the pullback and try to position myself down here around, you know, 58, 57 with my short if I was, going to do it right here today with the little bit of pullback we've got going on.
I'm gonna let my 59 naked put ride. If I get it, I get it. If I don't get it, they don't gift me the stock at 59. I won't cry about it. And if they do give it to me, I'll just turn around and sell calls on the following Monday.
So how worried are you, Jack, that you're underwater on that right now?
How am I underwater?
Well, it's right now, if you had to close it right now, you lost money. You're underwater.
Yeah, well, I don't mind being underwater. I can hold my breath pretty good. I don't mind being underwater. Part of being underwater is just temporary. The other part of the underwater is I don't have to buy back that 59 put. I wouldn't buy it back at a loss ever, never. I would just either get the stock at 59 or not. And I'd be willing to bet everything that the stock would be higher than 59 in the next 2 months after I got it put to me. I'd bet anybody anything they want that it'd be up in 2 months after I got it put to me at 59.
So sometime in the 2 months after he gets put on Halloween, he's betting it's above 59. So this is, to me, this is an important point, Jack. You made your decision what was acceptable for that position. What's an acceptable payment to take on the obligation to buy that stock at 59, right?
I think we got 12.1%.
And you were pretty happy about it when you came in on Monday that you did this.
Yeah.
And for anybody that didn't see this, you can come on here and watch, and we have the replays. You can go back, watch the replays. I'll throw the links in the chat here.
Now, when you say I'm underwater, you're talking about I'm underwater relative to the price I sold the 59 put at compared to where it is now.
Yeah, a
I'm
lot of people a lot of people will sell these and then the price moves against them a little bit. All of a sudden they're down 5%, 10%, 20% in their naked put or cash secured put, and they're freaking out. And I just want you to, walk through that a little bit, why you're not freaking out one bit.
I'm not freaking out one bit because I don't care what price the options go to once I've sold the naked put. If it would, if the stock comes down and the naked put would cost me more to buy it back than I got when I sold it, I wouldn't buy it back. The other thing is, once I sell a naked put, I never look at the price of the options after that because it's probably, I didn't make the most. I never get it at the high. And the other thing is, I don't look at the options price because once I'm on that naked put at 59, I'm only concerned about where is the underlying stock relative to my strike. The option price means nothing to me because that's going to change so much over time. Probably going to go down if the stock it doesn't get near 59. That value is going to go way down. So I never look at the options price. I only look at the underlying price and where is that relative to my naked put strike.
And that,
Do you get worried
basically,
you're underwater on a little?
I don't
Unreal.
at all. I
I-
I take on the price that I'm willing to accept as my payment, and I look at it as that's my money. And if I have to buy the shares, then I deal with the shares. Whatever I look at, we were looking at SoundHound just a minute ago. Let's just revisit that one because that's fresh on my mind because that's one I'm actively doing in my retirement accounts right now. When I sold it back last Friday, I believe it was at 15.50 strike, and I got paid 40 cents. Like when I was talking about it, I got 40 cents right here on this one. And that 15.50, that's looking at like 120% a year annualized for that kind of money. And now it's down to basically 6 cents. And I expect it to drop on down to 1 cent before I close it out. This is basically when I took on 40 cents, I was saying, I'm willing to buy this stock for a cost of $15.10 a share because it's the strike price minus the credit I got. And that would be my cost in this. Now, after I've locked in 40 cents this week, sell it again next week, that just increases, decreases the amount I'm going to have in these shares if I get them put to me.
Do you have any specific day that you sell the naked put?
No. um, when I've got free cash that I need to deploy and then I see the opportunity, usually I'm looking for dips in the stock price. And this one right here, it didn't, it came to me and it was breaking above this action right here on Friday. And that's when I was looking at it. We were getting above that 618 level on the bigger pullback, coming back above after we had done this secondary dip. We had gotten above the 618, dipped again, came back above. and we got the close above. So I was, it had gotten on my radar. I decided, yeah, this is a good spot. And then it's climbed. And even though it dipped back today, it's still dropping in value because it's nowhere near that 1550,
Mhm.
at least right now.
Are you long any stock?
Not in this one. This is a brand new one that I just picked up last week. So,
Like we say, never forget this, people. When a stock is moving higher up, that's the time you want to sell the calls. And when it's dropping down, that's the time you want to sell a naked put.
yeah, the thing is, though, you want to try to find a place where it's going to
Mhm.
have support when you do that because, like, to bring back up this one, sometimes the dip keeps dipping. I am underwater this one. I'm up here at 49 right now. I actually sold those 44s on part of my position for this week, and they already closed out for a penny yesterday as we did a little more dip. I didn't think I'd get called out at 44. I took the risk going in under my cost basis. I only collected like 15 cents, 20 cents a share for that, but the odds of that getting called out were very low. I was willing to buy it back to catch the bigger move back up to my cost basis.
Nice.
But sometimes when you sell, I thought we'd hold 49. Like I thought, all right, there's the move. This secondary dip should hold and we should go higher. Except I was wrong. At least right now I'm wrong. But I'm not worried. I'm down a little bit, but I'm still generating income. I'm selling that, I sold that 44 this week and bought it back already. I haven't done anything else to it. Uh, a lot of my position, I've got 50 strike sold out to November. Some 55 sold out to November. I guess 55 is up here. 55 to November. November is the next earnings, or late October.
Yeah, they're struggling, man. The story stock behind it is they're struggling.
Yeah, and you know things have a habit of turning about 6 months before the fundamental story changes too. So um, this will probably turn before the good news starts hitting. It'll probably still have bad news for a while after it starts the bottom. Turns the bottom, still have bad news, and people will be like, "This makes no sense," and then all of a sudden the news will start turning around. So
Now, personally, the only restaurant stock I would ever buy, no matter what, is McDonald's. You know,
yeah,
the what is Burger King? It's a Restaurant Brands International.
yeah, I can't keep track of. They keep changing. Like every few years, it seems like they change whatever they're operating under.
I was reading Bill Ackman has a big position in that, and the stock hasn't done anything. Uh, and like I say, with McDonald's, this is a great management team. This thing's been nothing but a moneymaker for me and my son for 30 years or more.
Well,
And
for the last year though, it's been nothing but sideways. So if you're selling calls and puts against it, it's great
yep,
because it hadn't gone anywhere.
yep, selling calls and puts against it. Not puts. I'm selling calls all the time. I'm adding to the position. Pays a nice little dividend. It's got one of the highest dividend ratings you can get. I'm liking it. That's my only real food stock. And I
Is this
use
on the div is this
Tyson.
on the dividend achievers list?
Uh, yeah, this has everything you could want in a dividend stock. Mainly that it's been trending higher for a long time. The only thing that
I
would
know
be this is if AutoZone paid a dividend, but it doesn't. So I'm liking this one.
I didn't know if this was on the merchants dividend achievers that consistently raises their dividend for 30 years.
Oh yeah, like a dividend king, dividend aristocrat. I'd have to look
Yeah,
at. I think they might be in the 50 year. They might be a dividend aristocrat, dividend king.
I can't, I can't keep track of those, but those are usually really solid to buy on dips. And so far, that dip holding in there on McDonald's. I actually have 2 shares of this myself.
This is a good one, man. This is a good
Eh,
one.
And it's in this account, this 50K account. People are like, "Oh, do you only do calls and puts?" No, I actually have some stock positions, smaller, that I couldn't buy 100 shares of, like McDonald's. My 2 shares just paid out almost $4 in dividend between the 2 shares. So, and that was the quarterly dividend that they just paid out
And do you
just
reinvest
recently.
that?
Uh, at this point, I just sat on it because it's only, it was $3 and what, $3.40 roughly between the two shares.
And when I
So I'm
do
just
that,
gonna,
when I do that at Schwab, there's some stocks that when I sell a covered call, the premium isn't enough to buy much stock. But you can buy fractional shares if you just click the box to reinvest the dividend. Schwab will just buy you a fractional share with whatever that dividend is, which is really cool. That did not used to be the case. And you can see some serious growth in that. And also look for companies that have a history of raising their dividend, right? You want that and you want the stock going higher.
and yeah, I'm looking for this to actually pop up into this 330 area, and I'll probably sell my two shares. Despite whatever you think, but I'll probably sell mine right up here and then wait for another pullback and grab it again.
And I'm
So,
not trading this. I would never ever sell it. Uh, yeah, if I ever retire, I'm just going to live on dividends if I can, and if you trade.
Burger King tastes bad, and that's what I eat for breakfast. I don't eat breakfast often, but I stopped and got a croissant or whatever they call it this morning because they had a coupon in the app or whatever it popped up. I was like, I'll try one.
There isn't a Burger King around here. I don't know how far I'd have to drive to find one, but I don't eat. I can't eat that stuff.
And Burger King for you is the rancher next door, right?
Right. Eat the steaks you can get up here. Just unbelievable.
Yeah, I'm in Chipotle. I'm in Chewy dog food also. Been selling $40 calls against my shares. And we did drop a little more than I expected on the last earnings. No big deal. Just brought my calls down here. Still going to make money if I get called out at 40. And looks like I'm going to go another week because we're not putting the 40s at risk right now.
Yeah, administrator says IBM also pays a good dividend. Yeah, that's why I'm in that one.
Let's
I,
see. Let me see if I can find what I was talking about on the dividend achievers list. Let's see if it'll pull it up for me. Wants me to verify I'm human and not a robot.
well, I don't know about that. I think
So here's the list of what they call dividend achievers. They have a history of consistently increasing their dividends every year for a number of years. And it looks like there's 17 pages of these right now. I found it on, this is 2025 dividend achiever stocks. I just Googled it on another tab and pulled it over. So these are ones to keep an eye on. And you can look at your dividend CAGR. And if this is the kind of things that interest you, the price to earnings and price to sales, I would keep an eye on because things that get high price to sales ratios, and high is things that start being near 30 or above 30. Those are dangerous. And then your payout ratio gets, if they're paying out more than they're bringing in, that's a dividend at risk. We were talking about that on Oracle, how that's that debt and servicing that debt starts to put the dividend at risk.
yeah, let me show you something here. If I could share the screen a second.
Yeah, I can stop sharing.
So I use this dividend tracker, and you can see they got a dividend grade of 74 out of 100. And this is one thing that I like a lot. The dividend is only 2.33%. But if you look at this dividend growth, if you could, that's a lot. That's high. They're growing the dividend 6.1% per year. If you have a dividend company has dividend growth that's roughly the rate of inflation, you're always going to be ahead of the game, right? So they're paying out 67%. You got all your price to sales here. But this is another thing that I really look at a lot is I want to see outstanding shares going down. That way my equity in the company is going up. And I also want to see this going up. No, it has been going up since here, but it hasn't been going up since 2013. But ideally, I'd want a rising revenue growth line and a declining outstanding share line and a
That's
sustainable dividend, one that they can pay without having to borrow money. That's how
those
I,
are all important things. And I was playing around with this list on dividend.com while you were showing that, and I figured out how to get the ones that actually have the longest record. And so I can share that back here when you're done.
this month I got 69 in dividend income.
Nice.
Yeah, I'm liking that. All right, take it away.
And share this back. So clicking on the consecutive increases and flipping the whole list. Here's the number one with the longest history of increasing AWR. There's the stock ticker, the American States Water Company. It's a
That's one of
utility.
the oldest, or was it York Water? Yeah, those water companies, that's not going anywhere. Yeah, Lynn asks, are those websites free? Yeah, I use the dividendtracker.com. That's free. I also have the upgraded version. I think it's, I don't know, 29 bucks a month, but it does a lot for that. And this dividend.com, that's free as well.
I just Googled dividend achievers. And for a long time, was a book that was published before the internet. And now they actually have a website and stuff like that. So this is free. Like I just Googled it and it popped it up. I don't pay for this at all.
Yeah. No, the other one tracks it all for me, and adds when they pay the dividend, it adds it to that. And when they increase the dividend, you get an email. So I've been happy with the dividend tracker. I've
Well,
tried
looking
them.
down through here, there's lots of stuff we've talked about, like Coca-Cola's in here.
Johnson and
And,
Johnson is one of my biggest. Exxon also.
and we can, scrolling on through here, Cisco's in here. That's a food company. They supply restaurants. SYY, not CSCO. It's SYY. It's Cisco. The other Cisco, as they call it. Got HB Fuller. Yeah, there's lots of long-standing PPG paints, Targets in here. Yeah, that one's at risk. I feel like right now
Is they're in real trouble.
they're gonna have to pull some stuff out. They're gonna ruin their 55 years of being a
The stock
consistent
is
dividend
down
increase.
40% or something. Target's
You know,
been
WW Granger's on here. That's another supply house. Uh, yeah, what did I just see? Something caught my eye. McDonald's, right there it is. 49 years. So they are on the achievers list. Right there it is. So these are quality companies. If you're going to buy them and hold them, these are the place you want to look at right here. Buying these things on dips, accumulate your position, and not getting called out. So hopefully this helps people kind of get your frame of mind around where the quality is. These companies have consistently raised dividends. Those are companies that show they're in it for the long game.
in it for the long game. And I think personally that a dividend portfolio should be the bedrock of everybody's portfolio. For example, I got maybe 80% of everything in dividends and the other 20 I trade. But I really think you got to have that solid bedrock. You know, the eighth wonder of the world is compounding, and you can compound for free if you got a stock that pays a dividend and you simply reinvest it, the dividend into the stock. If you want to compound on steroids, you reinvest the dividend in the stock and you sell calls and you take that premium and you buy even more stock. That's compounding on steroids. That's the ninth wonder of the world. And all it takes is knowledge and a little bit of money to get started.
Yeah, and there's your Exxon right here, coming in at 42 years. So you're holding a lot of the dividend achievers. It
Yeah,
sounds like.
I am. That's the rating, the growth rate, all those metrics I just showed you. Those are everything I use to craft my dividend portfolio. Administrator says, what do you do when a dividend stock is in trouble? Do you sell it? It depends. You know, some of these things can turn around. A lot of the times, the bad times don't last long.
Oop.
And there are many good dividend ETFs. SCHD, that's a good one. Noble, NOBL, that's another one. So that's paying 3%, 3.81%. That's awesome, right? Noble is the dividend aristocrat. So you're only getting the cream of the crop in Noble. So it has to be a dividend aristocrat with a long history of paying its dividend. So that one's considered very safe. SCHD as well. Those are two good ones.
And here's the list, and they kind of keep it pretty balanced. No giant exposure to any one of these.
Yeah. No, that's the structure of this is beautiful because it would cost a lot to get, a bunch of Lockheed Martin and some of these others. It would be very expensive to build this on your own. Whereas you can just buy a share of this and you have exposure to all these great companies. And this has options too, if you want to get into that. What's
And
the yield?
the beta is a little low, but the yield is right around 2.1%.
You don't want a high beta in some of this stuff. A high beta is only good for us when we're using options and we're looking at trends and momentum. But I'm fine with a low beta on super premium dividend stocks. I'm fine with that because you could still sell calls against it, even if it's not that much. You can still do it. And the other thing is the safety in these things. Uh, People always talking about, wow, I'm afraid of a market crash because the market's at all-time highs. But these dividend aristocrats individually, they could go down 50%, 60% per share price, and they're still going to pay the dividend. So when I have this freedom portfolio set up, which is what I do, I never look at the P&L on the thing. I never look at that. I only focus on the investment income because the P&L doesn't really matter. I know that over time, time is going to do all the heavy lifting on this. So I'm just in it for the cash flow, for the dividends themselves. And the other thing, like I said, uh, the dividend tax rate on a qualified dividend is 15 to 20%. That's the lowest. My ordinary income tax rate's 37%. That's criminal, but that's high, right? So if I can live off the dividends or a big piece of it being dividends, I'll be way better off for it. And you can sleep like a baby in this stuff because these companies, they have a history of paying dividends, and it's on their mind, right? They want to reward shareholders with the profits from the company, and that's what I love about them. And there's a few companies out there that if they would just pay a dividend, the stock would be so much more viable.
I'm trying to remember the ticker for one that I'm. Oh, SIA. Had the was one letter off. This is one that I like right here, right now. It has a bit higher dividend at 10.3%,
Wow,
but it has a beautiful pattern for getting an accumulation right here,
that
an
stuff,
appreciation of share price
that high
to
dividend
20.
stuff scares me. Mostly are their dividend traps, especially if you dig in and you find that they're borrowing money to pay the dividend or something like that. But most of them are what I would consider a yield trap.
This one, not too bad though. This one is a capital trust right here. So they invest in other things to generate, it's basically an investment company,
Mhm.
if you will. And I was trying to find what they actually have here. And they've had a pretty good history of paying out the dividend. And yeah, they don't actually tell you what they have, what they're holding in this. You'll have to go dig that up other places. But they've had a pretty good history of paying out the dividend and increasing and building shareholder value. So this is one of those double dip type trades I talked about where I go after a higher dividend, and I've got a whole portfolio that just goes after these. There's a few that go bust, but the ones that don't more than make up for this. And this is not a very large company, 30 employees, but they manage $1.2 billion. Been around since 1961.
Not bad. Good history. I've been around since 1961.
You look at the long history here. I mean, it does have swings in it, but it does consistently go higher.
The yield trap, folks, is dividend trap is just where the stock is dropping more than the dividend. So if this thing was dropping 12% kind of per year and paying 10, that's your trap right there. So you want the price to go up and you want them to increase the dividend every year as well. And you want that dividend growth rate to be pretty high.
See, this is, it does go through some lean times, but it in general has gone up for the last 40 years. That to me is worth taking a shot on it during one of these leaner periods where it's not trending right now.
And do you reinvest this dividend or do you?
Yeah, my philosophy, since I'm still very small, I don't have 80% of my money. I've only got more, maybe like 5 to 10% I've been able to build into dividends. And I'm still, you know, still in the cash generating end of this. I take those dividends and deploy them to, I actually spread them out. So my risk is spread out across different, I don't have a wide variety that I've already built. So I'm still accumulating exposure to different sectors and different companies that do this sort of thing.
Good. But you got your mind is in the right place. You know, the I think the ultimate life would be a mixture of dividend income and what we're doing here with premium income. That's my whole plan to
Well,
continue
I'd
this.
love to, you know, my end game is when this gets to where it generates 50,000 a month right here, and it's all just dividends. If this can get to where that number right there on the 1 month time frame is 50K and it's all dividends,
Oh,
I'm
good.
good. That's
50K a month in dividends.
yeah,
Yeah.
that's my end game right there. And actually got one of my clients, Lieutenant Colonel Goose. I talk about him here and there, and we throw up testimonials from him all the time. Uh, he's actually got himself to the point where he's making about 10,000 a month in dividends, and he's only got about $1 million put into this stuff. And he's actively chasing this sort of stuff. He manages it. He adjusts the positions, keeps track of the. He's got some AI agents pulling up news daily on his holdings. And he found a sweet spot where between 30 and 50 of these high dividend payers is the sweet spot where no one of them messing up or blowing out or do anything really hurts your cash generating ability. And even if it blows down, you can usually close it right away and redeploy that capital and be right back up and running within a month or so. And so he found, somewhere around 30 positions is what you need for those higher dividend payers. Now, if you go with the dividend achievers, you're making a much lower yield, but it's a lot more stable. So there's some caveats to going after the 8 to 12% dividend payers. And anything over 12%, I found gets to be those ones that are burning their nav and get to be the dangerous ones.
Mm.
Um, certainly when you get up into the 80 and 90 and 100 120% payers. So
My
these are
my
all things you learn if you chase after dividend payers.
and your yield on cost goes up over time, right? So my dividend portfolio is not nowhere near Goose's at 10%. Mine's paying about 3%, a little more, and that goes up as the yield on cost goes down. So I'm not taking risk with that. That's the bulk of my money is in dividends, and so I want it to be something I can live with and sleep well at night and pass on to my family. But living on dividends and premium income, that's the ultimate lifestyle right there. You don't need anybody. If you know how to make cash flow out of the stock market, you have the strongest skill set on the planet.
Yeah, and these are, I consistently kind of chase down some of these that pay out and keep track of them. Like here's another one that I was going after, ARDC. This one paying about 9.5%, and it's in a lean time right now. So it's part of the philosophy I have too is going after these when they're in lean times, so that you, look at this on the dividend adjusted basis. It has a consistent going higher, even with the swings it has. So
And administrator says, and Jack, you have stocks that only go up. And my friend, that is not the case. I have a loss in my dividend portfolio in Lockheed Martin. I have a loss in my dividend portfolio in Target.
LMT,
That damn thing.
and then targets,
Oh, Target.
TGT.
Yep. Yeah. But I also have Procter
Yeah,
and
that
Gamble,
one.
all that stuff.
Yeah, this one's been a little rough. And one of the reasons Jack and I were talking kind of smack about this being at risk. I mean, this is a downtrend and it's not just a temporary downtrend so far. This has lasted
Yeah. It's
getting
not.
close to 6 years here.
What's so bad about this thing is it was on such a great roll, and I think they had a management change, and they got too much into that woke stuff and DEI, and there was boycotts and you know that kind of thing. And since then, the bloom has been off the rose. The only saving grace this thing has is it got a dividend over 5%, and it has extremely high dividend rating, meaning that probably not cut the dividend.
No, circling back into one that doesn't pay a dividend right now,
But if
but
it did, that would change everything for people. I mean, even if he paid out 0.9%, just something, right? I mean,
yeah.
like, oh God, Apple, Microsoft, Google paying out this little piddly ass dividend. I mean, ramp it up. Give people a reason. Bring in some long-term holders when you put a dividend out there. So this one needs it. But even though it doesn't pay a dividend, what it does pay is hellacious options trades.
Yeah, this pays some amazing option trades. And Jack, we're on the magic day, are we not?
We are on it.
So we're just waiting for the green light signal that Jack has. He's
Two
probably not going
o'clock
to share it
today.
with us here, but let's talk about the trade really quickly, what it
Yeah.
would be. So
Well,
if we get the green light later today, usually you fire that off in the afternoon, right?
2 o'clock. Yep.
2 o'clock.
In
So we
time.
come down here and we look at a call spread. We would be right in here. We're out to how many days, Jack?
We would go out till next Friday.
So next Friday. So that gives us 8 days exposure. So that's the chain I've got brought up here, October 3,
Yeah. Woo! Robinson
right?
Royero is up 20,000 in profit for the month. Way to go. Now
Nice
don't go
job.
out and spend all that money. Don't let your neighbors know you're making money. Don't go buy a new car. That's what I tell people. Just roll quiet, right? Don't ever show it off. Just my wife. Yeah. Mine too. Yeah, I'm big on not showing off wealth. I don't wear a watch, a fancy watch, or drive too much. My wife drives a fancy car, but not me. I'd like to keep it on the down low.
Well, I
But
drive that Cybertruck, but otherwise I've got a $5 R Mark shirt on and I've got
yeah,
a Garmin watch on that
yeah, I got no watch on or a $39 Casio on, and my buddy has like I don't know 13 expensive watches that he'll spend up to 20 grand on it. I don't get it, but that's what it is. So
so
this is a debit spread, Lynn. Yeah, what we would do here is actually, if the stock is at 428, we'd buy the 427.50 call, and we'd sell the 430 call. And that's a
and
wrap order where you're buying one slightly in the money and you're selling one slightly out of the money. That's a wrap order.
and so we'd be buying this one right here. It's let's see. Hold on. Let me find the right columns there. They moved the bid ask thing for me. So ask and bid, the inside numbers there. Come back down. We'd be buying the one in the money. That's the more expensive price right there. Be
Matt is showing
selling.
off his trading success. Matt is doing it. He's showing it off. He's flashing around town in his 1999 Plymouth Grand Voyager. I love that. You're beating me. I got a 2008 Toyota Tundra and a 2025 GMC Yukon, but that doesn't really count.
I've got a 1975 Nova
There you go.
to go with my Cybertruck.
Yeah, I got the old truck and the new truck, and I bought my wife that BMW X6. I've never driven it, and it's so crazy when I get in it. It smells great because it smells like her, and she always drives, and she can go like this, and the volume will turn up on the radio, or go just wave her hand in front of the. I'm like, I'm never driving this thing, you know. I love seeing all these old cars, man. Steve's got a 1990 Camry with 320,000. Bodine's got a Grand Voyager Hemi. Rob has a 2019 Nissan Leaf. Now we're getting into it. All right, Ken says on the call spread, what is the trigger to close? The trigger to close, Ken, is you're going to buy this if we get the green light and you buy it, you're going to have a debit. And let's say you got a debit of 120, where you're going to take 50% of your debit and add that to your debit price, and then that you're going to put that out good till cancel and just leave it cook. 1999, 1994 Ford Ranger with a four-cylinder. Now we're getting into the 90s now. Yeah, cool. So that's how that works. So you take your debit, it's $1.30. So you'd take 50% of that, you'd add that to $1.30, and you'd put that out there good, like I'm talking about the second after you get filled. So today, 2 o'clock, if we get the green light, I'd buy this debit spread. I'd put the good till cancel seconds after I got filled on the debit, and I'd go fishing because you don't need to be around watching it, right? You just want to put it out there and let it cook and let it do its thing. And it might take a little time. So, there's no cell service along this river where I'm living, and I don't need it, right? I want to go out and enjoy my life.
So you
Oh, two
you
strikes
get
in, the
that
way
you
we
get
do.
that $1.30 debit, so you turn around and put your exit on order basically for $1.95,
Yeah,
50% of the
because
max profit.
if you looked at this, it would cost you, $1,300, almost 1,400. No, it cost you $1,500 for one call. Okay,
Yeah,
that's
for
a lot, right?
one call for 1 week.
One call for 1 week for $1,520. That's a lot. So, uh, what you do then, if you sell that higher strike price call, you drop your cost from 1,520 to $1.10.
It was $1.30 when we did the math a second ago, so it's just
Dollar
bouncing around a little bit, but
So $1.30 is $130 versus $1,500.
and you can make a 50% gain here with Tesla just moving 1 to 2%.
That's the killer right there. Okay. Now, Tesla, it routinely makes this move, a 1 to 2% move, and it can do it over a couple of days, no problem. So when we get in these on Thursday for the next Friday's expiration, we set ourselves up where we don't have to buy a lot of time in the trade because we know historically Tesla's going to make that 1 to 2% move while we're in this trade, and that's all we need.
Versus over here, just buying a straight call, you're going to need a
That's
$22 move higher to guarantee a
yeah,
50% gain.
that's the other part. Or we just need a little move to make 50%. You need a monster move if you buy that call straight up. And that's why call buying straight up is such a bad proposition because you have almost an unreal need for the thing to move, and it can't do that.
And you need a 5+% move here versus a 1 to 2% move here.
1 to 2%, it already does that quite a bit, right? Down to five
Usually
now.
does usually does that 3 or 4 times in a day.
I know. That's why we get such a great setup on this thing. I think it's 8 for 8 or 9 for 9. We had a loss in there, but these things are awesome.
And there's not safety by going deeper in the money. The
No,
the idea is to split the current price, and then when Tesla makes its inevitable move that it usually does within the next few days and pops up through, it's going to pay you out that 50% gain. and you get out and move on and wait for the next one.
Right.
It's an opportunity trade.